Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chenwala from Kotak Securities Commodities Research Desk. And like in every episode, we will be discussing the factors influencing commodity markets trend. So let's get started. The recent data releases from the US have kept the Federal Reserve on track for potential rate cuts, boosting market sentiments. The dollar surged above 103 mark last week as persistent inflation and rising unemployment complicated the Fed's policy decisions. The US Consumer Price Index (CPI) rose 0.2% month over month and 2.4% year over year, surpassing expectations of 0.1 and 2.3% respectively. Also, jobless claims increased by 33,000 to 2,58,000, marking the highest level since August 2023. However, a softer than expected producer price index (PPI) suggests that inflation may be cooling, contributing to rising expectations for modest rate cuts. The PPI was flat for the month and was up 1.8% from a year ago, lower than the expected monthly gain of 0.1% following following August increase of 0.2%. The CME Fed Watch tool now indicates nearly a 90% chance of a 25 basis point cut in November meeting, which has limited the dollar's upside while US equities rallied to record highs. The hotter than expected inflation data, combined with signs of weakness in the labor market, posed challenges for Fed policymakers and allowed gold to recover from a weekly low of $2618.8 per ounce. Lower than expected PPI solidified rate cut expectations, leading to a sharp rebound in gold price on Friday to $2679 per ounce and helping it post a modest weekly gain. Silver's decline was limited to 2%, supported by uptick in gold and base metal prices on Friday. Technically, on the daily chart, MCX Silver December future is forming higher highs, higher lows since August 2024. Over the past few sessions, 88,100 is rendered a strong support. Additionally, 86,150 can prove to be a level of demand. On the upside, next resistance is placed at 94,600, followed by 96,500. The 14-day RSI above 60 can provide further confidence to the sideways to bullish outlook, and the expected weekly range is 88,100 to 94,600. Talking about base metals, LME Base Metals closed lower last week following a briefing from China's top economic planner, which concluded without new commitments to boost government spending, despite Beijing's confidence in achieving its growth target. Further declines could follow this week if, as the key policy briefing on Saturday ended without announcing the size of the stimulus. Moving on to crude oil, WTI crude oil experienced volatility, swinging between gains and losses, as lingering anxiety about Israel's potential retaliatory strike on Iran countered sharp increase in US stocks and disappointment over the lack of new stimulus announcements from China. Oil prices are expected to remain volatile amid reports that Israel is preparing for a response to Iran, raising the prospect of a tit for tat exchange, especially since Iran has vowed to retaliate against any Israeli strike. Also, closure of several product terminals and disruption in pipeline operations due to Hurricane Milton are expected to affect supplies into next week. Technically, we saw a strong move of almost 11% in MCX crude oil November futures last week, and this week it experienced volatility depicted by its high wave candle. Dips in prices may halt near 6,000, below which the next support lies at 5,600. Forthcoming target stands at 6,600 and eventually 7,000. While the daily ADX stands near 19, a break above 20 could signify strength. The outlook for the week is sideways to bullish, and anticipated range is 6,000 to 6,600. Looking ahead, this week, US retail sales and key economic indicators from China will be closely watched. Also, the European Central Bank monetary policy is widely anticipated as markets are expecting a 25 bips point rate cut to support economic growth. If US retail sales reflect moderating inflation, expectations of quarter point rate cuts in upcoming meetings will be further solidified. Meanwhile, economic indicators from China will provide insights into September activity, and sluggish data could challenge China's goal of achieving a 5% GDP target. So, overall, this week, market moves will be influenced by US retail sales and China's data dump. On this note, we conclude this session of Commodity Audiocast and hope that we've offered you valuable insights. Thank you so much for tuning in today, and we anticipate your presence with us again next week. Until then, happy trading. Thank you.